All right, the highlight for Monday, December 16th, second half of December we're rolling into, mid-December. First of all, the driver, as we've been talking about, is in the passenger seat, still in the car, but the U.S.-China trade deal, we got through some uncertainty last week with having the deal on paper. We're not going to get into, preparing us for next year in this 2-minute, 4-minute highlight clip of today. The highlight today was twofold. Number one, how many times do you not do what you say you're going to do? Right? That happened to me. How many times do you have a thought? You just did what you said you were going to do, which means fit your style into your strategy, into your setup. You'd be fine. Even if you didn't say what you were going to do, even if you didn't do what you said you were going to do, at least you didn't do the opposite. So coming in this morning, we had a close on Friday that might have been here and an open on the next trading session that's there. We are also opening above the previous session's high. So that's called a gap open higher, period. So I told people the volume is good, the range is good, but I think because it's Monday in mid-December, it's going to be slow and the tempo is going to be dried up. What's key is, do we break after the open? Does this market give shorts from Friday, Thursday, any chance to get out? Because remember, if you're short from last week, you're underwater. We haven't traded up this high. You haven't gotten short this high. We haven't been up here. So in a gap open higher, the previous session shorts are stuck. And if the market doesn't open up and go lower, it doesn't give them a chance to get out. It says grind up. So I told guys that is the most likely probability for a day like today. Pick areas of support to get long. And so saying that, I look up and I'm short. Not immediately after saying that. First trade out of the game, I'm short because I got addicted to the suspense of this big move lower. Not this big move, but this move lower. Now, I don't hang on to it all the way up, and I was able to get out and then get long for some of this move up. But if I eliminated the short, just played it from the long side, I have a couple winning trades and no losing trades. Not a losing trade and 2 winning trades and still down because of just not doing what you say you're going to do. I look up and I'm short. I got addicted to this. It should have been like, let this play out. This is a push lower. I think it was actually in here. This is a push lower that still didn't breach. When it comes up in here, you're still in breach this, right? It's not in the context of this whole overnight session. The market started down in here. At this point, it rallied up to there. A pullback down to here is nothing in just the overnight scheme of things. It's barely 10% of the move from down in here to where the high was at this point. That doesn't mean you got to get long in here. You missed the long to go up, but this then should have been short for it. I shouldn't have been short for it. So it's important to know when you make mistakes. And if I just do what I say I do, I trade great. When there's moments when I don't do what I say I'm going to do, it's always sideways to losers. It always costs me emotion, money, or both. So in this case, it has been a grind up. That's what we said in the morning, and that's what it's been. And people who did good today played it from the long side and were patient. That's the next thing of this highlight that I want to tell you about. Play it from the long style and the mood of the market. When they overlap is when you're going to trade the best. But you got to know your style, and then you got to know the market's mood. Let me say this again. Your style and the market's mood is where your success will lie when you have success. You have to know your style, though, and you have to know what mood the market's in. If you're a patient trader liking to buy pullbacks, play it from one side, and it's going to trend up a little bit, today is the day you should have done well. If you're a momentum guy that likes price tempo to increase and breakouts and everything else, today is the day you should have tapped the brake pedal. If your style is here and the market's mood is down in here, guess what? This daylight, this daylight between the two is where your failures and losses come from. So it's about understanding and reading order flow. It's about correlating markets. It's about understanding if the style and the mood of the market is fitting what you're trying to do and understanding yourself. Trading is probably the top industry that's going to teach you as much about yourself than any other business out there. I know that this is essentially the only business I've been into. Many people that have come to me, many people getting into this business have been from other businesses, and they agree to that. This is a business that could bring you to your knees, but also teaches you as much about yourself. So there's a lot of wins and there's a lot of successes that you could learn from this business. But one of them is do what you say you're going to do. Certainly don't do opposite of what you say you're going to do. Not only in this business, but in life. And then secondly, you want to manage your risk. Understand it. Understand your style and the mood of the market. And when there's daylight in between the mood and your style, you should have less trades. And if everybody's going to think they're going to have the same style, you're wrong. You're never going to have the exact style of someone else. You can have similar styles, but not the exact. That's another thing, putting in a square peg into a circle open. If you got a community, which everyone should belong to, you want a community of all different kinds of traders, all different kinds of people, all different kinds of personalities, but one thing in common, no BS, and they're willing to work. They're willing to fight for their location. But from different backgrounds with different styles and different levels of patience. You'll find people you're maybe similar with, but if you try to trade exactly, overlap exactly the other guy, you're going to screw it up. You're going to overthink it. Nobody has the exact two same risk tolerances or speed or ability to react. And what happens when you try to duplicate exactly what someone else is doing is you miss the winners that person took and you catch most of the losers. You maybe miss the day he missed or the news event he caught. You got to make it your own. Put a square peg into a square opening and know that. Don't force. How do you know if you're forcing? You're trying to implement your style into a market that's against and versus and opposite that's going to make you pay. And you ain't going to know that the stove is hot until your hand's been on it for 5 minutes instead of 2 seconds, instead of 1 second, instead of a millisecond. Good communities give you a good sense of, hey, what's today going to look like? Hey, strap yourself down. This is going to be a wild ride type of day. Big range, big volume, big drivers. Tweets are coming all over the place. Lower your size, increase your risk, trade areas, not particular prices. Or, hey, gap open higher. If we don't break, it's a kind of an open drive. Play it from the long side. It'll be quiet. It's grindy. We could be trading 10, 20, 30 points higher in 2 or 3 hours and shouldn't surprise you. Everything else is meaningless. So it's about order flow. It's about market correlations. It's about your style. It's about the mood of the market, finding those overlaps. It's not too many. Keep it simple. Everything that I try to train people is in being an expert into simplicity. Forget about complexity, simplicity. Do the simple great, and everything else takes care of itself. Everybody wants to jump simple, maybe because they don't know what it is or because that's just the way they're guided. Everybody wants a leapfrog simple. They want to go from knowing how to cut, measure a piece of wood to trying to be, that's a stupid analogy. Where am I going with that one? I was trying to think what what do they call, my wife's grandfather was a woodworker. You got to know how to tape, you got to know how to measure and cut before you're a master woodworker. And a lot of people try to jump tape measures and pencils when trying to work with wood and be a great carpenter. Simple. Be great at the simple. That's what you get here. Great at the simple. Whether it's the simplicity of my wit or the simplicity of Carl, who's been here a long time, and his mental approach. to life. All right, guys. Have a good rest of the day. We'll see you tomorrow.